Kitco News special coverage of the Rule Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.
All right, welcome back to Kitco News, on location in Boca Raton, Florida for the Rule Symposium 2025. Now, we've heard from some great speakers here that the global monetary system is under pressure, but from both ends. On one side, central banks are accelerating gold accumulation and diversifying reserves, but on the other, fiat trust continues to erode as government lean on debt, deficits, and monetary intervention. And with the financial institutions warning of lasting inflation and rising geopolitical risk, gold's role as a natural reserve is gaining new momentum outside traditional systems. At the same time, private sector players are advancing tokenized gold strategies. A $1.1 billion capital deal involving StreamX and BioSig aims to launch an on-chain gold-backed treasury model. Now, their pitch: bring the $142 trillion commodity market to the blockchain rails, backed by vaulted bullion, not stable coins. So what does it actually signal about the confidence in the fiat, and how does it stack up against others? Well, we're going to find out. To break it all down, what's real, what's noise, we're joined by Frank Giustra, of course, longtime gold advocate, mining financier. I mean, I could introduce you as a lot of things. Thanks for making the time.
Thank you.
We got a lot to talk about. Let's start with the macro. We'll talk about the sovereign gold buying. I mean, it continues to surge. We've seen central banks out over 1,000 tons this year. More, that's the most since Bretton Woods. I mean, it's kind of crazy. Now, we know the financial narrative. We're Kitco. We've talked about debasement. We've talked about some of the mainstream. But what isn't mainstream? I mean, is it sovereigns just going out and buying all this? What's happening here behind the scenes?
Well, the central banks, when you talk about sovereigns, is the global central banks, mostly the BRICS nations, some of the Eastern European countries, a few in the global South. But basically, it's a move away. It provides two functions. First of all, it's a move away from the dollar, which is part of the whole de-dollarization movement that I started predicting about 6 years ago, and now is a mainstream conversation. And you have to look at the reasons why that part is happening, and there are basically two reasons why de-dollarization is taking place. One is it started with the sanctions, and it started with the Russia, the confiscation of the Russian funds by the West, which spooked the rest of the world into believing that, well, if they can do it to Russia, they can do it to anybody else. And as you know, the dollar is the single largest reserve currency in any central bank, still is, although it's coming down slowly. So part of the move to de-dollarize came from fear of being the next on the naughty list, America's naughty list. And as I mentioned yesterday, currently 1/3 of the planet, 1/3 of the countries in the world are under US sanctions, and 60% of them are very poor countries. So, naturally, that move, put the fear of God into them. The second, which is becoming more of a recent concern, is the fiscal situation in the U.S. The U.S. is heading towards a fiscal cliff. There seems to be no desire from either party to fix the deficits, address the debt growth, and you just saw it with the big, beautiful bill, which, you can call it many things. I'm not sure it was how beautiful, but certainly the only thing we know for a fact is that it's going to cause an additional deficit over the next 5 years, and concurrent with that, they raised the debt limit by $5 trillion, which has been the longest running joke in America since the early 60s. They've upped the ceiling like 82 times or something. So it's a running joke, and it doesn't make any sense.
And I think Besson yesterday was just offering new auctions, trying to top it up just before it comes to play.
I know, we're going from tragedy to farce, or vice versa, in record time now.
It's almost surprising, because you would almost suspect that politically, if you know that the U.S. dollar is in a little bit of a gamble here, I guess the midterms are showing up. It's just become a political weapon, the Fed?
I don't know. Listen, the midterms are going to be determined by a lot of things, and to me, it's really, a lot of it hangs on whether the MAGA base still believes in that the America First strategy is actually benefiting them by the first 2 years of Trump's administration. I don't know. Maybe they will, maybe they won't. I don't see yet MAGA, the base, getting delivered something that benefits their pocketbook. Obviously he's stuck to his guns on immigration and the deportation thing, but everything else, the trade war, hasn't really produced anything yet. I don't see, people vote with their pocketbooks. And so we'll see in the midterms whether Trump gets, or the Republican Party gets the support when people really think, well, am I better off than I was 2 years ago? So we don't know. But anyways, getting back to the reasons for de-dollarization. So you've got those two factors at play now, and then you have the tariff wars. So you add that, where the Trump administration, I don't know why they decided to take the whole world on at once. I don't know if that was the right strategy, because now you're basically trying to bully the entire planet, and I'm sure a lot of these countries, as we saw with South Korea, Japan, and China, go, well, we should talk to each other. And when was the last time China and Japan talked to each other? And whether the EU is now, swinging between China and the U.S. in terms of, their own trade policy. So I'm not sure that was the right approach. I don't see any real tangible outcome yet. I predict that they'll never get a deal with China that they think, any type of deal they thought they were going to get with China, they're not going to get. China will not be bullied. They're just too strong to be bullied. And I think we've seen the reality of that, because it's just a truce at this moment. Trump did his thing, they did their thing, and then everybody called the dogs off, and now they're negotiating. But my prediction is that the Chinese negotiation, China won't give up much. Europe, the EU, outside of the UK, we'll see. I mean, I think they're trying to figure out how to play this. But and again, what benefit is that doing to the average American? We don't know. So that's the other thing. But certainly from the foreign perspective, it's another reason to go. We and the abandonment of NATO, backing NATO. Foreign countries' trust in America as a reliable partner, whether it's trade or defense. That's kind of, people are questioning that now. So that's another reason they're going to go, do we need that much exposure to dollars? So who's the beneficiary of all of this de-dollarization?
Yeah. Gold. And it has been. And I mean, you were talking about China, and I must say, some say, oh, it's not a crisis. The world, their central banks are just picking up. The World Gold Council obviously putting out some numbers on that. But the scale and urgency seems to show a little bit of a different issue. So is this kind of a structural regime change that they're front running?
Oh, 100%. So I think that the old world order is dead and gone. We don't know what the new world order is going to be, but there's going to be a lot of jockeying over the next number of years, and it might end up in some form of conflict. If you just look at it from a historical perspective, when you have this transition of power and the changing of a world order, conflict pretty much comes with it, which is probably the scariest thing. That we all have children, and you don't. That's what you don't want that. But sadly, that's a potentially an outcome. But I think that we're going through this change. There's going to be before we establish a new world order with new rules, it's going to be chaotic. There's going to be a mishmash of ways that countries deal with each other, trade, currencies they use, the mechanisms that they use for trading. It's going to be kind of a dog's breakfast of different approaches, but all designed to execute outside the U.S. dollar system. That's the primary goal. How do you create a new environment of trading and currency exchanges by not going through the current system?
Yeah. So, and by using gold as an anchored reserve asset.
That's one, that's one. But the other part is, right now, what most people in the West are missing is what the BRICS movement is creating, and certain countries within the BRICS movement to create that system to find an alternative route outside the dollar. The biggest one is this M-Bridge project, which was launched by China, Thailand, the UAE, Hong Kong, and it used to have the Bank for International Settlements. They dropped out for probably obvious reasons, and now Saudi Arabia has joined. And they have 31 observing countries that are watching this project. And simply how it works is it's using central bank digital currencies in bilateral trade, local currencies between two nations, okay? So let's use an example. Saudi Arabia, China. All Forex is done ledger to ledger, central bank to central bank, completely outside yuans to, exchange for whether it's dirhams or it could be rubies, rubles, whatever. And the criticism of that structure was always, what does a surplus country do with unwanted currency? So, currently, if people have US dollars, they're happy to keep it in US dollars and buy treasuries, and that's how those reserves are built by surplus countries like China and Japan. But the criticism was, why would a country have a whole bunch of unwanted yuans or a bunch of unwanted rubles? And this is where gold comes into play. All those same countries that are in the BRICS, that are part of the Enbridge project or observing the Enbridge project, are the same countries that are buying the gold in large quantities. So here's the mechanism. You have a trade surplus. Let's say Saudi Arabia has excess yuans from its trading with China. China has now created the opportunity to exchange those yuans on the Shanghai Gold Exchange into physical gold. They've established a warehouse in Hong Kong where that gold is kept, and you can go and physically get your gold. And they will plan to build these warehouses in other regions of the world. And that's how you net settle. And that's how gold comes back into the monetary system without it actually banking a currency. You just have to have enough gold to settle your net deficits.
So when you're talking about, what we're currently seeing within the White House, Treasury Secretary Bessent dealing with lots of questions about BRICS right now. Trump was saying yesterday that it is a problem with the U.S. dollar. These countries have come out to challenge the U.S. dollar, and he's going to give them a 10% tariff. Yeah, that's not going to stop it?
Last year it was a 100% tariff threat. This is the second threat he's made.
So it's not stopping?
Well, I'll tell you what it's telling me. They've acknowledged that it's a problem. That's basically admitting that, okay, they're de-dollarizing. BRICS is now 11 countries with about 44 applicants. It currently represents half the world's population and probably 40% of the GDP, and it's growing in size and power. Americans, the Trump people, they're not dumb. They can see the writing on the wall. So now where I think the mistake is that if you have to threaten a country to use your currency, what message are you sending that country? To me, it's only going to accelerate the process. The guys are going to go, we need less dollars, not more dollars. Yeah, so I thought that was always not the best move to threaten a country. I think they have to find ways to use carrots instead of sticks. And, the U.S. has 2 carrots that it can use. And obviously, a defense umbrella, security guarantees, is the one that they provide for countries in the Middle East. And
we're seeing it now.
Yeah, so that's the trade-off. It's like, if you stop using the U.S. dollar, we're going to take away your security guarantee. Japan, right. Saudi Arabia, right. UAE.
So, we got this. You brought up the Trump era, tax cut package, the big beautiful bill, add $4 trillion to the deficit over the next decade. There's Fed is facing mounting, obviously, pressure to cut rates. Yeah. We're seeing Trump tweet about it every day. Yeah. I wonder if we're past the point of return of the fiat credibility.
We're very close, and I'll tell you why. Trump. There's a new Fed chair coming in May of 2026. Trump will be appointing that person. It'll be a person who will do exactly what he wants them to do. And he's told you, I want the rates go to 1%. I believe he'll get that. So then you have to ask yourself, if that plays out and the new Fed chair manages to get the rates down to 1%, what does that do? Because then...
Print machine goes.
It's a print machine starts, because the one thing they can't control without QE is the longer rates. The 10-year yields, which is everything's priced off the 10-year yield, which is now trading at close to 4.5%. And if any panic or there's a failed auction of treasuries where there are not enough buyers and the Fed has to start stepping in, that's printing money. And that's QE. They'll call it something else, by the way. Printing is out of the way. QE is old and forgotten.
It's a soft landing.
Yeah, they're using the term enhancements at the Treasury to manage a non-functioning bond market, yield curve control. They'll call it they can call it, God's plan. It doesn't matter. They can call it, it's still money printing. Yeah. And we're going back to that. And when that happens this time, in my opinion, with a $7 trillion balance sheet at the Fed that they were not able to normalize it last time. Although Bernanke promised it, I called BS on that right away, and I wrote about it. I said, you'll never be able to move that balance sheet down to where it was pre-recession and pre-crisis. And so I think if we get back into QE next time, it's going to cause a very a spiral effect. And I think that that's when you potentially get a US dollar crisis. Now, it may not happen. They may have another kick at the cat, but I think we're coming to the end of the 9 lives. How often is the world going to believe that they're going to be able to normalize if they start printing again?
Well, what are your thoughts on gold backs within the U.S.? I mean, if you're advising a major institution, or even you're talking to the government, how do you advise on that?
Well, for the U.S. to back its currency, truly back it like it was pre-World War II, you would need to back the currency to the tune of 20 to 40%. With the amount of gold, if they truly have 8,100 tons of gold in Fort Knox, which, by the way, the other funny thing is that they had all this fanfare about the Fort Knox audit, Musk, Trump, and all of a sudden we got distracted with all of this, everything. We got tariff wars, real wars, ICE raid protests, university protests, Diddy, Epstein, We've been distracted, and all of a sudden, no one's talked about it again. It's disappeared from the discourse. No one said it. It's like weird. It's like, I guess we're not going to go there. We're not going to go. But the point I'm trying to make is that, I can't remember what the question now was about the.
I know now. You took me on Fort Knox, and I was thinking how they didn't want to audit it.
No, it was about the value. So if you wanted to back a currency with gold, the U.S. dollar, so you do it off the basis of M0, M1. Pick one. You would have to revalue gold at a much higher level, even at 20 or 40%. Okay, and by the way, that's been done in the past, but you have to in order to do that, we did it in 1933. In order to do that, you have to control a lot of the world's supply of gold. Well, that's no longer the case. Now 8,100 tons is the biggest single officially reported, because I think China has a lot more than they've, and even Goldman Sachs came out and said they think they could have up to 10 times more than the 2,200 tons. But anyway, you would, even if it was a collective agreement amongst nations, say the BRICS nations decided to back a new BRICS unit, which I think is down the road, but if they decided to back it with gold, there is enough gold there to actually price gold at a different level. And then you could say, okay, tomorrow gold is going to be, pick a number. And now we have a 20% backing of this new currency. No, I don't think any single country can pull this off on its own, but I think if we're going to get a new monetary system, it's going to have to be a collective agreement, something like the Plaza Accords, but agreeing that gold is going to play a role as a backing. But again, given all the tension in the world right now, and where America's fighting with its foes and its allies, I don't see that happening in the near term.
While we're on that topic, just before we pivot over to, this new monetary layer of tokenization, I've got to ask you, we were talking about China, obviously a lot of people on X saying underreported. I deal with government information all the time, and then in a month I have to come and report that it's even been changed. Yeah. So obviously, right? Everything, almost all of it. So the fact of the matter is, do you think that the sovereigns have front-run this central bank demand? And is it China leading, or is it secretly, the Saudis?
So it's China started. China started accumulating gold in around 2010, when they saw the writing on the wall that the U.S. was really going down a bad fiscal path. And they were accumulating. Then other BRICS nations slowly joined. Most recently, Saudi Arabia, which does not report its official reserves and hasn't reported anything since 2015. But we see the physical flows. They're buying covertly, and China's buying covertly, and they're stuffing it into institutions wherever it's going to be until they need to come out and say something. And why would you come out and report the true holdings until you need it to? Because all you're going to do is have others front run you. So they're quietly accumulating.
Until you have enough.
And at some point, they'll probably have enough, but there's other countries that are playing catch up now to try and balance their reserves by, selling euros and dollars. And now gold is the number 2 reserve in central banks in the world. The euro's gone to 3rd. And I think that trend's going to continue for a while. And at some point, we'll see an official use for gold, like I've described, or a backing. I think it could be either one.
It's just the race till then. Okay, well, as sovereigns accumulate physical gold, the private sector is seeming to race to kind of digitize it. Tokenized gold markets were once kind of, a unique niche market. And I mean, we've talked about this. It's attracting serious capital. We just talked about that deal. Yesterday, I found it very funny. I was here at the show, and I think a push notification came out on Bloomberg talking about something you're involved in. And it went out to about 16 million other people. Perfect timing. So, Frank, I got to ask you, StreamX BioSig, $1.1 billion in financing to launch a physically backed tokenized gold treasury model?
Correct. Okay. So it's a combination of two strategies. One is the treasury model, which is very similar to what these Bitcoin treasury companies like Strategy, being Michael Saylor's company, acquiring Bitcoin as an asset, as a treasury holding. So in that regard, we buy gold instead of Bitcoin. So that's that part of the strategy. But the added value that the Bitcoiners don't have is that we're going to also tokenize that gold and then list it on various crypto exchanges, such that what I refer to as the TikTok generation, the people that wouldn't know how to go to a Costco and buy a bar of gold or call a bullion dealer. That's way too much brain damage for that generation, the millennials, the Gen Xers, or Gen Z, sorry. And so for them,
right on
the only way they're going to buy gold is go, okay, I just bought some gold. That is how they want to do it. So we're going to cater to the people that want physical ownership of gold that's allocated in a vault. Okay, so we buy gold. It goes into a dedicated vault. Your token is actually traced back to that piece of gold, whatever it's a bar, it's a gram, whatever it is, and you have that physical ownership. Now you can buy gold, physical gold, or much easier than you can today. So those are the two strategies of StreamX, and I think I think that the market is ready for this. I mean, obviously Bitcoin has saturated that strategy. There's been so many copycat players now going to that game, and
gold-backed helps, though. I mean, you have a real asset,
in my opinion. So listen, people love Bitcoin. People love gold. I'm a gold. I sleep better at night owning gold than I would sleep at night owning Bitcoin for a lot of reasons. But listen, if you like buy Bitcoin. I don't care. But for me, gold is the true long-term store of value that's proven, and where you can sleep at night and know that over the centuries, the decades, and the centuries, it preserves wealth, period. So that's the reason Bitcoin aspires to be that. I don't think they're there yet. It certainly does not trade like gold. It's not correlated in the same way that gold is. To me, it's a risk-on asset, not a risk-off asset like gold is. So we're creating the strategy for those that believe gold is the safer play.
Yeah, and I mean, Frank, you mentor a lot of younger people. I mean, looking at you here at the show, you've been talking to a lot of investors. Everybody's trying to get your attention. Younger generations understand this stuff a little bit more now. Are you starting to find that side? Those Bitcoin maxis are coming to gold, or the gold bugs are going to that digital side?
I don't know whether, listen, the Bitcoin maxis are rabid believers in Bitcoin, and you try and talk to them about gold, and they'll call you a boomer. That go die, old man. You don't know. Just I get called so many names on Twitter or X just because I like gold by people that think that I'm dated and a pet rock and and you know what? Fine, but I think there are a lot of people that believe in owning both. And a lot of people that would only own gold. So I still think it's a fractured investment community, and only time will tell who's got the right idea. Is it a blend? Is it one or the other? I'm in the camp that I'd rather sleep at night.
Yeah, and the second thesis to this model, I mean, is what you mentioned. I mean, this fact that we can denominate the balance sheet in gold, which I haven't quite seen done before. I don't know if I've ever. Okay, yeah, I was going to say, how does that structurally compete? I mean, you talked about Michael Saylor. They have it there with the upside, same kind of model, different backing. That's simple.
Yeah, it's that simple. Plus, we have the additional feature of tokenizing the gold, which gives us, it's a business. That generates fees and income, which Michael Saylor just buys and hold. And we're going to buy and hold gold, but we're also going to tokenize.
Would you ever have your own vaults?
I don't think that's necessary yet. It maybe got big enough, but right now we're dealing with a U.S. major institution bank that is going to provide the storage.
1.1 billion. I mean, Cantor's not a small institution. This seems like it's got some.
Yeah. So you know what? But listen, even a billion is small in terms of what the potential for this market is. You know, I would like it to be 10 billion, 20 billion, 30 billion. You know, and we'll see if we get there. But that's going to be a function of executing the business plan, and there's always risk, obviously, but that's the ambition, that's the aspiration.
All right, let's pivot over to miners because we all are at the Rule Symposium. I just saw you up on stage. You've been talking about your career. Everyone knows that you're coming in. I mean, you've been fixing companies, buying undervalued assets, really turning them around, and we've been talking to some of those issuers here. What's the current industry look like? I mean, it's a big difference between last year at $2,400 gold and $33 to this year.
Well, the only big difference so far, and it will change. Like last year, it was difficult to raise capital. If you were a junior miner and you went to the market because you needed equity, it was I don't care who you were, it was just difficult using investment bankers and using the capital markets, unless you had your own deep pockets, like certain groups in this industry have their own deep pockets, the Friedlands, the Lundins, and the Ross Beatties, and myself to some extent. But what's happened is that now, today, you can access capital. You can see the deals every day, 30 million here, 50 million there, and they get done. There are buyers at the other end of that investment bank's representation, which sometimes, investment banks, but they're actually placing it. So there are institutional and retail buyers for that product. What hasn't changed yet, to any great extent, is the price performance of these assets. In previous bull markets, and I've been doing this since 1978, so I've seen 1, 2, 3. This is the fourth bull market in mining that I've seen in my 45-year career. And what hasn't changed yet by historical standards is the price performance. In a past market, with gold at 30, gone from 1900 to 3300, it would be insanity. These stocks, even Moose Pasture would be trading at ridiculous valuations. I've seen it all before, and this time, people are very cautious. It's like the valuations are nowhere near historical highs, given that, especially even look at the producers that have, say, an all-in adjusted cost base of, say, $1,400 an ounce all in, and with gold in the, like Aris, our mining company. Had this been a different market, a different environment, the past, let's say it was the market of 2001 to 2011, Aris, which is trading at, $9, almost $10, would be $30, $40 a share by now. And we haven't seen that yet.
So in the junior space, are the majors looking carefully at these evaluations then? I mean, if we're at a small...
Oh, yeah. And you're already listening. I can tell you for a fact that the seniors are starting to circle certain companies. Yeah. And you're going to see either mergers or takeovers and consolidation. I know that for a fact because I hear it. And so I think you'll see continued consolidation. To get real institutional interest in today's environment, you need to be big. Yeah. Big is important. Size does matter. You have to be in the indexes, the ETFs, to make that cut. Now, the GDX just changed their rule from $1 billion minimum market cap to $2.5 billion. Overnight, they just said, okay, too many companies are $1 billion now, and they kicked off a whole bunch of them. So now we have to work really hard to get to $2.5 billion to get back on the GDX, the senior, not the GDXJ. But and so the game is, for me, every time I build a gold mining company, this is my fourth, Aris is the fourth in 25 years, is the ambition is to get to 1 million ounces a year production as quickly as possible. Because then you're institutional quality, then you'll be in the indices. People have to own you. They have no choice. They like you or not, they own you.
They need the answers. Yeah. I mean, there's a lot less quality assets out there, no?
It's getting harder and harder. Right. It's getting really hard because there are very few world-class discoveries have been made in the last 30 years. Very few. In the 90s, there were tons of world-class discoveries. We haven't seen very many in the last 20 years.
Talk about shareholder value. As it hasn't maybe happened with some of the juniors in terms of the returns on the equity side, we've seen, Wheaton Precious, a couple of these guys do not too bad. Agnico obviously had a nice little run there.
I own it. I love it.
You love it. I mean, it's been nice returns. Yeah. But with that being said, I'm curious, they just started printing cash. I mean, this is going to start hitting the balance sheets over the next quarters. So, I mean, long runway to run, but not only that, how are they returning it to investors? I mean, yes, it's shares, but is it buybacks? What?
Well, buybacks is the simplest, dumbest way to do it. Just reduce your outstanding. But what I see the rumblings of, and we'll see if I'm right about this, some of these gold miners that are printing cash now have to look outside of gold, and they're going to copper, because there are more copper opportunities or base metal opportunities than gold. And I know of two scenarios that are currently brewing in the background. I can't talk about it, but where these guys that are just have so much cash to deploy, they have to deploy it, because they sit on cash, they're going to get penalized. And so they're moving outside of gold. I mean, I think you'll see a couple of those transactions soon.
You know, since Trump did talk about that potential copper tariff, I must say, Friedland's been going out on X lots there.
I was with Robert last week in both France and London. By the way, Robert used to be my biggest client when I ran Yorkton back in the early 90s. And, you know, I've known him forever, and we did really well together for a very long time. And now he's doing his, you know, he's copper. He's got an amazing mine in the DRC.
And wrote it out.
Yeah, and he's been at that over 20 years. So you have to give him credit. He stuck with something through thick and thin, made it work and made it happen. He loves copper, and I think he's, you know, it's the DRC, so it has its issues. But now, you know, you've got this Rwandan DRC peace agreement, and if that sticks, and, you know, the M23, people stop attacking the northeastern part of the DRC, I think that's great. But there's also the China problem. You know, DRC allowed a lot of Chinese investment in the mineral sector. Now they're trying to pivot towards the West, but they still have to deal with the Chinese. So, you know, it's the richest country in all of Africa, so wealth in terms of minerals. So, yeah, but I think copper, I love copper. I think Robert's got you know, we have our own copper project in Botswana. The Next Metals, which is the Salibi, the Selkirk mines, which we bought, again, out of a restructuring, got control for an incredibly low price, and, you know, now we're building it. And so I love copper as well.
Yeah, well, it's sure hot. I mean, the prices are certainly up today on the future side. Okay, before I let you go, I mean, I know you're a busy man. You got lots going on. I got to ask you about jurisdictional risk and if it's priced into the market. I mean, obviously, we've seen what's happening with Barrick and Mali and talking about taking their gold reserves to pay government debt. Is jurisdictional risk, I mean, you've worked all over this world. Is it priced into the market?
Most times, yes, until you get, unless, like, literally, it's priced, sometimes it's priced in the wrong way. Like, people are, and Colombia is a great example. Colombia has the worst stigma that is undeserved. It's the only country in all of Latin America that's never gone through a military coup. It's the longest running democracy. It has a court system that works. I've been doing business there for 35 years. It has a separation of powers between the legislature and the administration that works. We've seen it work. The court system works. And it has this whole stigma because of the, you know, the Escobar days, the FARC and ELN days, the guerrilla insurgencies and all that, and it's undeserved. So it gets discounted for the wrong reasons. A place like Mali was great until it wasn't, you know, but you should have seen the writing on the wall, because you saw what was happening throughout the whole Sahel with the Russians coming in, the old Wagner group, renamed to whatever they're called today, but they basically started to kick the West out, especially the French, out of West Africa and the Sahel. And they came to Mali and basically said, okay, we'll provide the regime with the protection it needs against insurgents and the Islamists and whatever, but we want your resources. And by the way, that Barrick company, we would rather own it than they do. And so, you know, and as poor Mark Bristow has to deal with this, but, you know, but how do you negotiate with people to bring guns to the boardroom? I mean, it's like, you know, if they want your gold, they're going to take it. Yeah. And you know, you should have seen the writing on the wall on that one, but they were already there. They'd all invested billions. You can't move your mine across the border. You're stuck. When you break ground, you're stuck. Yeah. And that's the problem with most countries, when they lure you in with incentives, and then they have a change of government, and then their treasury runs dry, and they go, well, where can we get some extra money? Oh, those foreign mining companies, they're making a killing because, you know, once every 10 years, commodity price goes up for a bit, and they're, you know, and that's when the cash rolls in. Never mind that you had to go through 10 years of shitty markets. Yeah, okay. So, and that's, you deal with that all over the world. You deal with that in the United States, Canada, you know, Chile.
Have you seen actionable, anything actionable from the government in the U.S. or Canada? Because they've been talking about how they're more pro-mining, but I mean, it's been more smoke and fire.
Well, yeah, it's early because they just, you know, in Canada, we just had an election. Obviously, Trudeau's government was against all of that stuff. Carney's come in and saying the right things. Execution is going to be interesting because he has to deal with inter-provincial relationships, and he has to deal with the First Nations groups, which have a lot of say in development and infrastructure and all of that, pipelines, ports, railways, all that stuff. So, and in the U.S., Trump is saying, yeah, listen, now it's a national security issue. I want to make it easy to, okay, but now you got to see it happen. And these two scenarios are very recent, so now let's see if it actually works.
Yeah, well said. All right, Frank Giustra.
Always.
President of Fiore Group and founder. Thanks, man. I appreciate your time. Best of luck. I'm Jeremy Saffron here at the Rule Symposium 2025. We're going to have some great content all week. Stay with us.
Kitco News special coverage of the Rule Symposium Natural Resource Investing is brought to you by G Mining Ventures.